Oh, you left my heart wide open. You threw it on the ground. Oh no, but where it is now, it's waiting to be found. But then last night I tried to call you. It rang once, then straight to voicemail. And my heart, it can't take this hurting. In the meantime, I'll be searching. I'm gonna keep on searching. I'll be waiting. Maybe I'll hear you say it. I've always been so optimistic. See, I'd push through thin and thick. We used to risk it all, but now it's all down the drain. And we used to stay in our lane, but you left me with the pain and the shame of being some old fool. Oh, now what was the rule? Girl, you've got me feeling like I am a fool. Yeah, I'm waiting for. Oh yeah, I'll be waiting. I'm waiting for. I've been searching all over the world, hoping to find someone new. And then each place I seem to go, it leads me right back to you. I've always loved you to the core. I never wanted anything more. I never wanted, never wanted, never wanted, never wanted. Oh no, I'm waiting for. Oh yeah, I'll be waiting.
Ani, Bojo, Nimki Skijigo, and Dejnikaz. I'm doing a couple things at once here. My name is Lindsay Sarazin. I am born and raised here in Nipissing, North Bay area. My family comes from Pequannagon, which is out in Golden Lake. And I just want to welcome you to the IPAA workshop series, IPAA online workshop series, and where this series covers bases on the arts and everything that goes inside of the nitty-gritty details of the arts. I just wanted to introduce our special guest today. Her name is Tova Epp. Tova is a tax preparer, actor, certified animals in disaster rescuer. She's been working at art books for over 10 years, doing the taxes of many incredible artists. Tova graduated with a BFA distinction from Concordia University. When she's not at art books, she can be seen at one of her many other jobs around the city, gig economy life, or auditioning for yet another commercial. Tova is going to be talking to us about taxes today, and I got to admit, Tova, I'm going to bring you in here in a moment, but I got to admit, I know nothing about taxes, so this is going to be super informative for me, and I hope it is informative for you as well. I'm going to be bringing up Tova here in a moment. There we go. Tova, welcome.
Hi, thanks for having me, Lindsay. I'm really happy to be part of the IPAA online series. And I'm going to start with a land acknowledgement. I'm in Toronto, and so we acknowledge the land we are meeting on is the traditional territory of many nations, including the Mississaugas of the Credit, the Anishinaabe, the Chippewa, the Haudenosaunee, and the Wendat peoples, and is now home to many diverse First Nations, Inuit, and Métis people. We also acknowledge that Toronto is covered by Treaty 13 with the Mississaugas of the Credit. So thank you so much for having me. As an actor as well, taxes really frightened me, and I didn't want to know much about them when I got out of theater school. And it wasn't until I met the office that I'm now working at that I realized that we are running our own businesses when we're performers. We are responsible for our own money, and paying taxes isn't horrible, can be painful, but it's not horrible. And there are reasons why we do it. Certainly in this current climate of the pandemic and the benefits that we've been entitled to, I feel better having paid taxes for the last couple of years, knowing that it is hopefully helping my community around me while I'm fortunate enough to be able to continue to work. So we're going to talk a little bit. We have an hour, so it's quick. We will have a question and answer session for about 20 minutes at the end. So if you want to, you will be typing in questions to the various chats, depending on how you're watching this, and Lindsay and I will be going through them. But try to hold your questions, because probably I will hit a lot of them in the meandering 40 minutes that we'll have before the question and answer. I'm going to pull up a PowerPoint presentation with some slides and some phone numbers and stuff like that, and we'll start with that. So let us share the screen. So here is tax tips for freelancers, for artists. The freelancers is the general term, but artists tend to be freelancers. We do tend to work in the gig economy. So that's roughly it. This is just quick background on me. As we said, I'm an actor, I'm a tax preparer. I like animals. I hug pigeons, and I was on Kim's Convenience. Just a couple of shots of me doing different things. So the first thing we're going to talk about, first of all, I'm going to use the term CRA a lot in the next hour. CRA, the Canada Revenue Agency. For those of you that don't know, Canada Revenue Agency is who we pay tax to. And they administered a lot of the COVID benefits, so those Service Canada administered some as well, but most of us were dealing with the CRA. So when I talk about the CRA, it's the tax people. The biggest thing that I find people don't know is really just when our tax filing deadlines are, and those are really important to know, because paying tax is one thing, but the government can also penalize us for filing late or paying late. So it's important to know what our responsibilities are and our requirements are for filing and paying. So for most of Canada, April 30th is the tax filing deadline. That's for most of Canada. But of course, those of us who are artists of any kind, we actually have until June 15th to file our taxes if we have a freelance business. So if we are artists earning freelance income, self-employed income, gig economy income that is not paid to us through an employer issuing us a T4, we're probably filing a freelance return, which is called, on the tax returns, called a T2125. That's just one of the forms on our regular Canadian tax return. And if we have a form like that filled out on our tax return, we have until June 15th to file without penalty. So penalties kick in on June 16th. When you file late the first year, the penalties are 5% of your amount owing, and it compounds daily. When you file late repeatedly, they can bump that penalty depending on your case. So if you file late a couple of years in a row, they're charging you 5%. And after the second or third year, they might say 5% is not really scaring this person, so let's bump it up to 7%, 8%. I've seen it as high as 19%. They can really bump up the penalties when you file late regularly. So one of the best gifts you can give to yourself is to file on time. Even if you know you can't afford your tax bill, filing on time will cut your penalties right out of the picture. And that can be so punishing to people if you are filing late. It's so daunting. So if you're filing late, get caught up and just file on time no matter what, as long as you can. Again, not worrying about paying on time, because that's another thing that they can get you for. But if you file late and pay late, they're going to get you for two things. If you file late and you don't owe, they're not getting you for anything. So June 15th deadline for most of us, and the payment deadline is April 30th, no matter what. So it's complicated when you have until June 15th to file, but you have to pay by April 30th. And that is a bit of a trick that the CRA's got us into. But the main thing to do is just to try to, if you're going to file late and you want to pay on time because you have some money, you won't be paying interest on stuff that you've paid before April 30th. So you don't know how much money you owe. You think you might owe $100 and you give them $100 by April 30th, and then you file your taxes on June 15th and you owe $102. You're only going to pay interest on $2. So it can be a huge savings to just sort of know the deadlines, know when they're expecting things and when they will kick in penalties. The interest can change quarterly, which is a pain in the butt. So it's a bit hard to predict, but right now it's been 5% for quite a while. So penalties on late filing start at 5% and go up depending on how often you're late. Interest on late payments is 5% and changes based on interest rates and prime and the Bank of Canada. So we don't have any control over that. And it does seem to change. I've never seen it change in the quarter, but I'm sure it can, because what we're going through right now is so unusual. We don't really know how it's going to affect us long term in terms of finances, but deadlines are really important. So if you think you owe $100 and you give them $100 and at the end of the day you file and you owe them $99, they'll send you $1 back. Actually, no, they don't send a refund back if you get less than $2. So if you are owed by the CRA less than $2, they don't send you the money, although direct deposit makes it easier. So as long as you're owed more than a couple bucks, you'll get a check. Also, you can sign up for direct deposit. So one of the most important things to do now that we know our deadlines is to sign up with My Account with the CRA. A lot of people have in the past year signed up for My Account because of the COVID benefits being administered mostly through the CRA's website. But if you don't have My Account set up, it is a really, really great resource, because not only can you apply for the CRB, the CERB, a variety of things, you can also change your address, change your marital status. Most importantly, there was a thing that came out a couple of years ago, 2 years ago. A lot of us are entitled to a small amount of like tax-free bonus checks from the government for GST credits, for Trillium credits. And those credits used to come by check. They're trying to get them all to be direct deposit. But if you ever got checks and didn't cash them, and a lot of people didn't cash them, they now have an option in your My Account desktop for uncashed checks. So if you're in My Account and you look towards the bottom right-hand corner, there's a place where it says uncashed checks, if you have uncashed checks. And if you click on that, you should be able to locate if there were checks that you didn't cash 10 years ago. Canada Revenue Agency checks don't go stale, so you have a chance to cash them. When this program was first announced, people were finding hundreds, if not thousands of dollars of uncashed checks in their account. It was a real windfall. So if you haven't signed up for My Account, do it. And if you haven't looked for your uncashed checks, it can be a real bonus. If you'd forgotten about even $50, there can be some secret money there that they can get to you. So a really great trick for these days is to check for your uncashed checks on My Account. When you sign up for My Account, there are two ways to do it. You can log in through your banking portal, or you can log in just directly through the CRA with a secure password that they used to pop it in the mail, and I believe now you can get it by email, so it's a bit quicker. But once you have My Account set up, if you have an HST number, setting up for my business taxes My Account, so that would be my business account, which is the next sort of, there's personal taxes as My Account. My business account can administer your business taxes and payroll, but also GST, which for most of us freelancers, GST is the thing we need to administer. You can check on installments required, check on installments paid, check on returns filed, that kind of stuff. My Account and my business account are a really handy tool to help you with your tax filing. Once you're in My Account, there we go. Once you're in My Account, this is just a desktop. This is sort of the home screen of My Account. There's a few things that you can see here that are really, really handy. So along the right-hand side, tax information slips. So if you think you're missing a T4, T4A, T5, RRSP contribution, and up until, and recently, as of I think this year or last year, you can get tuition slips there. You can click on that link and you can select the year, pull the drop-down menu, view all, print as a PDF, and you can get every single slip that was on file for you printed as a PDF, which can be really handy for your accountant if you're sending something to your accountant. It's a really great way to find your slips. Bear in mind that the deadline to issue slips for most slips was yesterday. So slips are still trickling into the CRA, and that option is currently probably out of date because people are getting T4s this week, T4As this week. And bear in mind that T5s and T3s, which are usually investment, bank interest, investment, dividends, that kind of stuff, but also sometimes royalties, those are not required to be filed until the end of March, which is a pain in the butt because if we're trying to get our taxes done in March and we know that there's still a slip maybe coming, we have to be aware that we still could get a slip by the end of March for a T3 or a T5. Not everyone has those. They're not as common. T4s and T4As are the most common for those of us working. And you can get them from the CRA, which is really, really handy. You see, you can also see that you can change your address and phone number, which is important because the CRA checks postal codes when you're filing your taxes, wants to know where you are. You can arrange direct deposit, which is really great. So for those checks that you didn't cash, you could do that. Arrange for electronic they have a portal for mail, so you can get your mail paperless as opposed to paper. You can authorize an accountant to speak on your behalf through there. A bunch of different stuff that's really, really handy. And also you can check your tax balance. So if you owe money, if you've paid installments, if you have anything sitting in an account for you, all of this can be accessed through the home page. And then I keep losing my mouse. There we go. And then the only other thing that's a little bit of a quick little close up here, there's the mail icon. That'll have notices of assessment in there, any kind of review letters you might get. People get review engagement letters from the CRA really often. People think that they're being audited, but they're not. A letter that says this is a review, not an audit, just means that they because our taxes are self-assessed, we say to them, this is what we did, and they say yay or nay. Sometimes they say, can we just get some more information? So that's a review letter. Audits are a whole other story, and they're not as common as people think. So we want to take the fear of audit right out of your heads because it's not really worth thinking about. I've been working at ArtBooks for, 12 years now, and I think I've seen 3 tax audits through ArtBooks in that time. They're just not super common. I'm going to knock on wood. But I mean, the CRA, basically what they do, sort of the overarching idea is every year they pick an industry and they do an deep examination of that industry. So a couple years ago, 5 or 6 years ago, they did basically a big audit of servers reporting tips. That was the project that they had. And so they focused on restaurants in St. Catharines and audited pretty much anybody with a server income in St. Catharines, identified, obviously tens of thousands of unreported tips. And the next year it was long haul truck drivers. And the year after that, I think what we've had recently has been administrative managers have had reviews. So it's pretty much in hairdressers once. So it's not really worth worrying about them, but if you have My Account set up, your mail is a really important thing to check. They will send you an email saying, hey, you should go to My Account, you've got some mail. They don't email you. The CRA almost never emails. It's a pretty unusual thing that they do. They will tell you that there is a mail in your My Account, and that's where you want to go to check on things. And then if they do request information, say they send you a letter saying, we just want to see your tuition slip, we just want to see your rent receipts, which are again, these are normal reviews. You can use Submit My Documents, which is the next arrow over, to submit things to them electronically. Up until 2 years ago, up until this fall even, we had to fax stuff to the CRA. I was still faxing during COVID, trying to find fax machines that worked in the pandemic when we were shut down to deal with the CRA. So it's a nice change that they're now allowing electronic submission of information. And so that's it there. Submit My Documents is really handy, super useful to people who have to respond with multiple pages of requests for like rent receipts or check stubs, that kind of stuff. These are really, really great tools to have. A lot of people are afraid of the CRA in general and afraid of this website in particular because they feel like it could be scammy, spammy, hacked. So far, there have been a couple of security breaches, one security breach, but in general, I feel like we're pretty safe here. I think that we're safer at the CRA than we are with a lot of like Amazon accounts and PayPal accounts. So we're all doing, it's a good tool to have if you feel safe doing it, and I think you should feel safe doing it. So now that we know your responsibilities as tax filers, what are we as artists required to do? So artists have complicated taxes generally because we have income that hasn't been taxed at source. And by that, I mean a day job. So if I was just an employee at McDonald's, my employer has built the restaurant, turned on the lights, paid the rent, paid for the fryers and all the produce, and I'm just going to sling my burgers and get my tax, get my T4 at the end of the year. They've paid me a salary. They've withheld tax, CPP, NDI on my behalf. So that's Canada Pension and Employment Insurance. They've paid that on my behalf. I've paid that on my behalf. I've paid my tax. I got a T4. My taxes take about a second to do. They're straightforward. But when I'm an artist and I have income from grants and theater companies and speaker fees and honorariums, it's more complicated and requires a bit more math on our part, which is why we get that extra 6 weeks to do our receipts at the end of the tax season. So then when we do, what we want to be doing is filling out a T2125. That's a statement of income. That is basically, it's a profit and loss statement. So if ever you've watched a TV show where they've talked business talk, they talk about profit and loss. And that's basically, my business, did it make a profit or did it make a loss? It's the bottom line is profit or loss. If my business lost money, I'm probably not going to pay tax on that business. My business made money, I'm going to pay tax on that business. And if I have other stuff going on, it's all being added together. So I have employment income and investment income and rental income and business income. All of those numbers get added together before I pay tax. The good thing about a business income is that what gets added together with the other expenses, with the other income, is my net income. So that's my income after expenses. There was obviously a lot of information in the news right around Christmas about the CERB benefit and the poorly communicated information about people who were applying, who were freelance, whether they could apply having grossed or netted $5,000. It was really poorly articulated. It wasn't very clear. The CRA had always intended it for it to be net, but people were getting told that it was gross. And there was, for those of you who probably know, a huge outcry and uproar. The NDP got involved. The arts unions got involved. There were petitions signed and delivered to Trudeau, telling them that they couldn't do this because so many people were applying based on their gross income. There's so many artists are living so marginalized right now. Their gross income is the only thing that would allow them to be eligible for CERB. And when they filed their taxes last March, they didn't know this whole thing was going to spiral to the way it is. So they just recently, I think about 3 weeks ago, announced a reversal of that decision. No longer has to be 5,000 net, which is a huge life saving for a lot of people. So if you were concerned or anxious about the CERB repayments, the main thing to know is that there will be a clawback if you made more than $38,000. So I'll come back to that and I'll just quickly show you a little bit about profit and loss, gross and net. Freelance business, this is roughly what it looks like. If you had a theater company, if you're putting on a production, your gross income is going to be the total of a variety of different streams of income. People get confused about things like crowdfunding and grants. They're both taxable. Grants are taxable with the assumption that most grants are applied for with a budget that will probably spend the entire grant, so that you're not really paying tax on the grant, but it is taxable income. Canada Council now has the new portal, which I think was started 3 years ago or so, where you're able to, and they encourage you to look at the grant that you've received and really plot out when you're going to need it, when you're going to spend it, so that you're not receiving the big 10 grand in 1 year and not spending it till the following year, because that can make your tax return look like a bit of a roller coaster over the years and really set you on a weird course of owing money refunds. So it's really helpful to know when you're going to be spending the money to offset the grant income when you're picking out, if you're able to decide when to take the money. So grants are taxable income, ticket sales, crowdfunding, expenses. What you see here is basically my gross profit is $10,000, my net profit is $2,500. I pay tax on the $2,500 and not on the $10,000. And that's the key with tax, is that you get to save a lot of money. But it's where CERB became a problem. If people were applying based on gross versus net, you can see there's a big difference. If there was the net, this person doesn't qualify. And if it was the gross, they do qualify. And that was the issue that we were fighting for a little while. And it's come now to be that we're okay to apply with having been the gross income. How do I report benefits on my return? So that's a big question this year. It's pretty straightforward. The CERB benefit I see now, they come on a T4A, and a T4A is a really common slip for other income. So it can be scholarships from school, it can be grants from the granting bodies, it can be my brain. It can be and just fees for services. So if you were to do a production of something I saw just a T4 the other day from Driftwood. So Driftwood Theatre Company issues T4As, Tarragon doesn't, Canadian Stage does. A lot of the theatre companies have mixed feelings on T4As. You're not going to get guaranteed having a T4A the way you are going to get guaranteed having a T4. T4s are mandatory to file if you have a day job. T4As have not been enforced as mandatory. They are strongly encouraged to be filed by engagers, but they're not being enforced to be filed by engagers. So when you have freelance income, you have to keep track of it yourself, because there's no guarantee you're going to get a slip that tells you how much you made. That being said, T4A, the exact same slip, can also report your Canada revenue, your CERB benefits. Most people have gotten their slips by now for these benefits, but if they haven't, it's pretty straightforward. The different benefits are in the different boxes. And then if you did have tax withheld from your CRB, it'll be in a different box that has, box 22 has tax withheld. But this is basically the CERB information, and there's a lot of different benefits we have to report. But in terms of tax return, it's a very straightforward entry. Those boxes tell the government that it's a benefit, not employment income. Specifically, that's important because employment income is what you have a clawback on if you made more than $38,000. So where we need to repay for the CERB, there's a recovery. If there's a clawback. So if you've made more than $38,000, not including CERB, so from any kind of net freelance or employment income, if you've made more than $38,000 last year, you will be required to repay on your tax return 50 cents to the dollar for every dollar you've earned more than $38,000. It's part of the tax calculation that you'll be doing with your taxes. So it's not something you have to math out yourself. It'll be part of the tax software's plan. But just be aware that you might be required to repay some of your benefits if you actually had good income around the CERB benefit. This is just a really quick, very small image of a T4 and a T4A. The T4 is the bigger one. Usually it has a number of boxes filled in. So if you don't know the difference between T4 and T4A, T4 is going to have income, tax, CPP, EI eligible earnings, CPP eligible earnings, union dues, charitable donations, health insurance. There can be a lot of stuff filled in there, at least 8 boxes, if not more. And the T4A will have 1, maybe 2 boxes filled in, really only usually 1 box with income and potentially a box with just like an ID number. So T4 is the bigger one, has a lot more information, says that you're an employee. T4A says you were getting a grant, or you got CERB, or you got a scholarship, or you did a day of work on a show. These are all, it's a very all-encompassing slip, the T4A. What constitutes taxable income gets more and more complicated the longer, the further into the gig economy we go, because people are doing different things now. Airbnb is taxable income. People don't think about that, but Airbnb is taxable income. Cash payments, oftentimes people don't think that they're taxable income, but tips are taxable. So if you were a tattoo artist and you were getting tips, that's taxable. The same way as service tips are taxable. Babysitting, there's actually a place on the tax return for parents to kind of let the CRA know that they paid a babysitter because they want the babysitter's SIN number. So it's a way of ratting out your babysitter to do their taxes when they're 13 and have made $100, but it's the government. The other things that people get confused about is things like Patreon. So Patreon, if you're doing art and you have a monthly subscription service, any kind of Indiegogo, Kickstarter, GoFundMe's that are created to raise funds to make art or to produce something, those are all taxable income. They're fundraisers, so they are taxable income. ad sales online. So if you have a website and you're getting, Google ads, those are taxable. Etsy shops, all of these things are taxable. The one thing we want to try to remember is that if we're reporting this income, we're trying to report the gross fee, so what we were paid, and then we can claim the expense of using that service to lower our income. So I use Etsy. I buy a mug for $10. The person that I bought the mug from gets $10 and then pays Etsy $1 to sell it. So they'd be reporting $10 of gross income and $1 of expense to have sold the mug. It's kind of a rough outline of how you want to deal with that virtual income, where you basically only get a small portion. We try to report the full income and then claim the expense of having paid someone to help us get the money. Why we do this oftentimes, aside from the fact that it's factually correct, is that artists have a hard time making money. It's a well-known fact. It's hard to make money as an artist. And sometimes we have years where we've made no money. What we want to then do is try to show that we have an intent to earn a profit. So that's the government's term. It's one of the criteria the government applies to our returns. Does this business have an intent to earn a profit? And one way to prove that is to pay somebody else to help us get money. So having an online shop and paying a fee to make your money is a great way to show intent to earn a profit. Myself as an actor, I have an agent. So when I pay my agent, I have an intent to earn a profit because I've been paying him to try to get me well-paying jobs. So showing intent to earn a profit is an important filter when you're doing your taxes, to try to show intent. Even if you fail to actually make a profit, showing intent is important. So expenses like advertising are really important. Advertising and websites and that kind of thing that can show that you really want to get your art out there. I had some clients a number of years ago who never really made any money from their art, but they taught their art. They were artists. There was no question they were artists, but they didn't make a lot of money. And when they got a letter from the CRA saying, we don't know if you're really an artist. Of course, it was upsetting to them. They wanted to prove it. And we fought it and we got what we wanted and everything worked out just fine. But when I sat down with them the next year, I said, so what have you done to sell your art? And they said, well, we're in this gallery. And I said, great, where in the gallery are you? Because I went to the gallery and didn't see your art. And they said, oh, well, we're just in a drawer in the corner. So they really didn't have an intent to earn a profit if they were content to have their art hidden in a drawer. You have to actually try to sell your art in order to have a business. Otherwise, the CRA can deem you as a hobbyist. And that can be quite offensive to artists. It can be wrong, but we're dealing with, when we are artists in our community as artists, it's hard to remember that there's people outside of our community that aren't artists and don't understand art. But the greater world of Canada, there's much fewer artists than we think. There's a lot of people who don't do art, and they all work at the CRA. And so trying to understand and explain art to them and how it works can be challenging. So you want to be communicating within your tax return that you're legitimate. When we talk about expenses, whenever I go in person to do a tax talk, we have a dry erase board and a marker, and we brainstorm expenses. And the first expenses people always throw out are things like rent and food and clothes, which are not the best expenses because we already need to have them just for the nature of being human and living in a city. We need to pay rent and eat food and wear clothes. So the better expenses to highlight, we still want to claim a reasonable portion of our rent, because if we work from home, or a reasonable portion of networking meals, because if it's talking shop with the director and hoping to get a job in their theater festival, then yeah, buy them dinner, that's fine, it's a write-off. But lunch when you're on the run is not a write-off. And clothing, just because you're an actor and need to look good, isn't a write-off. But what is a better write-off is paying for IMDb Pro or casting workbook, or paying your equity dues, or if you're a musician, getting a website for your music. Those kinds of things are more important and are easier to justify in the drive to show you have intent to earn a profit. So this is a very small template for a visual artist. I'm sure it's harder to see unless you gather close. These are all also available from Artbooks' website. We have a website with some sample templates for different industries. I just chose visual artist, but it's neither here nor there. Every individual has their own income statement. This is this is your profit and loss. At our books, we make a tailored one for each client that we have that looks like their business. They get a copy to use as a template for all the years. But basically, this is just a quick brainstorming of what kind of expenses a visual artist might have. So performing artists would have a different one, which would probably involve agent fees, hair and makeup, costumes, props, rehearsal hall, that kind of stuff. People oftentimes get pretty confused about what they're allowed to claim for expenses. And you have to just, again, we're going to apply the filter of what's reasonable, and also trust your gut. People if someone's pausing on something and thinking they don't think it feels quite right, then maybe there's a reason why they don't feel like it's quite right. And maybe you don't want to write it off. I do think that seeing a professional accountant can be a really good boon to your business. It's a write-off to see an accountant, but also even if you're like really good at doing your taxes, there's stuff that is harder to do when you're freelance. Specifically, the softwares that are available, sort of the cheap, they use for the U-File and the TurboTax, they're great, but they are designed for the majority of Canadians who are not us. And so they can put your expenses in a weird part of the return and put your income in a different part of the return, and then your business doesn't really hold together cohesively and can look wrong. I've seen a lot of weird wrong returns filed through TurboTax from people who just followed the steps, and the steps didn't speak to them as artists, and so they kind of went all over the place. So even if you go to an accountant once and just sort of watch what they're doing and take notes, it's worth an investment to have an accountant if you have complicated taxes. This is a short hour, so we're going to have time for some questions that'll probably get a bit more specific, but we'll move on now to just if you are doing freelancing and you need some bookkeeping or invoicing apps, some of the better ones are the easier to use ones. I like FreshBooks. It's Canadian, which is great. FreshBooks is a good invoicing and bookkeeping app. I believe that Wave is also Canadian, Cashew is Canadian, QuickBooks is pretty industry standard. They're all fine. They're about $20 a month. Some of them I think even have a free profile, but if you are trying to keep track of things and you want to go beyond pen and paper, the first step we'd probably want to have would be Excel. Excel is a great formula, a great spreadsheet just to do simple math and keep things in categories. But if you want to go beyond that, these are some handy apps just to get you started with even just invoicing. If you use FreshBooks for invoicing, you can send out invoices to all your clients at the end of the day. They can pay you. That way you can set it up so you can get merchant services. So that's credit cards paid. They take a big fee, but you can do that if you wanted to get paid right away. It's a nice software. These are all nice softwares for just basic bookkeeping. Quickly, HST, and then we'll go on to questions. So HST is full of misconceptions and people applying wrong. Yesterday I had a client just say, I started charging because I thought I had to, but I don't have a number. And that was a bummer. It was a bummer that she was doing that. Not the end of the world, but you can't charge HST if you don't have an HST number. The CRA considers that fraud, and they get real pissy about it. It's easy to get a number. You call the number I have on the screen there. You ask them for an HST number. They'll want to know when you hit $30,000. So that threshold, that $30,000 is for people who are earning freelance income close to 30 gross. That's before expenses, just adding up your invoices. If it's close to 30, you want to get a number. The amount income that doesn't go into that 30 is things like grants. Specifically, it's grants. So if you're having artist project grants, you wouldn't count them in your 30,000 freelance, but you would count foreign income, which is confusing. We don't charge foreign income. We don't charge HST on foreign invoices, or we charge them, the term is we charge them 0% HST. So if I was to do a bunch of work for an American company while I was sitting in Toronto and I invoiced an American address company and I charged them my invoice, it would be 0% HST to them. That income that I'm earning is part of that $30,000 threshold. Once I've come close to hitting 30, I want to get the number, and then I want to charge HST consistently until I stop having a freelance business. You don't get to not charge in a year where you didn't have a ton of money. You just charge. The good thing about HST, the good thing is that it's not your money, but you get to keep what you spend in HST when you have the number. So whatever I collect for the CRA, so if I made $30,000, I would collect $3,900 of HST over the year. I put it away in a safe space and I don't spend it That's the biggest downfall of HST. Don't spend it. But then as I'm running around doing my business and I'm paying HST on office supplies and paying my agent HST, all the HST that I'm spending, I get to keep. So while I might have collected $3,900 of HST, I spent $1,000 running my business in HST. So I'm only going to give the CRA $2,900 of HST, so $2,900 of HST. I get to keep $1,000 of the HST tax-free. So there is benefit to having an HST number because you get to keep the HST as tax-free income, and that can be pretty handy. So HST is daunting. Again, having an accountant on your side can help you with that, but it's doable, and you can make it work for you by getting to keep the HST you spend, and that can be valuable, $500, $600, $700 a year that you get to keep straight up, which is really nice. So we're going to move into the question and answer period, because I think that usually that's going to be, there's going to be a lot of questions. And I think what we'll do, I'll stop sharing the screen, and Lindsay is going to help look at some stuff. Feel free to pop the questions in the chat, or there was a YouTube, there's a Facebook. So whatever you got. If you don't have any, I'll just keep talking, because I can do that.
Thank you for all that. I'm still processing all the stuff that that you were talking about. I have a hard time with numbers, so for me, this was really, really awesome. And I'm sure a lot of artists as well have a really, really hard time with numbers as well, because we're artists, you know.
We don't want to do numbers. I resisted being a tax preparer for a long time because I didn't think I should do numbers.
Yeah.
But I like not paying tax I don't have to pay, and I like paying tax that I do have to pay. Like, I just like knowing where my money is going. I find it quite helpful.
And I think that's a hidden skill with artists specifically, because we focus on the art, and we focus on, you know, creation, and we don't really think about the business. And if we can combine the business sense with the tax sense, and there is a question, but I'll get to it in a second. But yeah, if we can combine those elements, then it would be really we'd be super powerful artists here in the industry, right? And
nobody goes to art school to become a business person. Like, we just don't do it. But it's so helpful. I love empowering artists to have a little bit more control over their money. So many artists, especially actors, they have no control over how their money comes to them. The agent just sends them a check, and they're like, I don't know, I guess something I did 2 years ago is being replayed. They don't get control over it. And so knowing your taxes can be a little bit more empowering, to know a little bit more and have a bit more control over your money.
So we do have a question on YouTube. Comes from ACMT25. Beyond we're going to go back to the showing the intent to earn a profit portion. Beyond the insult of being called a hobbyist by the CRA, how does this affect your taxes versus being considered a legitimate artist or business?
Beyond the insult, it actually can be financially pretty challenging. There was a case 3 or 4 years ago of a very famous sculptor named Steve Higgins, who's out in Nova Scotia, and he's in his 60s, is a lifetime artist who's received numerous grants, and he's collected in big galleries, national galleries. He's got a lot of important work out there, teaches at NASCAD, and he was audited and deemed a hobbyist, and it was insulting to the arts community as a whole. People who had served on juries and assigned him a grant, who deemed him an artist, had been told that they weren't correct. It was insulting because one arm of the government, Canada Council, deemed him an artist, and one arm of the government, the CRA, deemed him not an artist. The auditor's issue was that Steve didn't have an intent to earn a profit. They deemed him a hobbyist. And it's hard to sell sculpture. It's hard to sell sculpture. This audit resulted in, I think, Steve being levied about $14,000 in tax bills, because basically what the auditor did was they denied all of his expense claims. So all of the stuff that we do to reduce our tax bill, they denied the expenses and said, you're a hobbyist. None of these expenses are to make money. Therefore, you are now owe us for 3 years worth of wasted expenses. Luckily, there was a good result for him. His cause was so well publicized, and because it was such a ridiculous audit, a lot of people got involved. Some lawyers got involved pro bono and fought it, and it was all reversed eventually. and he's fine. And actually, I met him on a Zoom call in the summer, and it was a fascinating story. This auditor was just a really nasty piece of work who really didn't want Steve to do well. And that's really, really rare. My sister was audited for 3 years, and her auditor was lovely. And I would go with her to the meetings just to sort of be a moral support. And he was lovely and tried really hard to understand her business. But her business was weird because she's a social media influencer, which is like a super weird business and has weird expenses. But watching her go through the question and answer, like, is she a hobbyist or not, and being able to she provided like a business plan with her advertising budget and promo and stuff. And so she was able to prove that she was a business, because she was looking at probably $100,000 of penalties, interest, and repayments because of the audit, because they were going to deem her a hobbyist. So the main reason beyond the insult is that it can be financially devastating to have your taxes reassessed and then to say, we don't allow these expenses. It can be, and an audit, my sister was in audit land for over 2 years. It took over 2 years to finalize, and was hell the entire time, despite the fact that her auditor was really nice. Like, he was a nice guy and super reasonable. It was still horrible. So those are the potentials beyond the insult. It's really hard.
That's crazy. So make sure you get some receipts and really sell your art. Pretty much is the message.
And keep your receipts. Keep your receipts for 7 years. That's really important. Keep your receipts for 7 years. Box them up. My sister happened to have a flood which destroyed a year of her receipts, but she was smart enough to take a video of her receipts sopping wet in the flood. And the auditor looked at the video and was like, "Yep, look at those receipts. They're soaking wet." And he made a note. Like, it was that thorough that, you needed to provide proof that you'd lost stuff. So, wow. Documenting things. People always want to like throw the receipts out and just take a photo. At the end of the day, the CRA wants paper receipts. It's a really annoying thing, but I took a cab of my sister's, like a banker's box of sister's stuff, to the CRA and dropped it off on Front Street for this guy, because what they want is paper receipts at the end of the day, unfortunately.
I keep all my receipts in a big mess in a bin, and I just drop it off at the bank, the bookkeeper.
Yeah. I mean, I'm a bookkeeper, but my receipts are in a paper bag. It's not fun to do, but we got to do it.
Yeah. We do have another question.
Great.
From Shira Y. How would we include expenses that don't really fit into the categories on the T2125, like equipment and materials?
Yeah, it's a good question, because the T2125, as we see it on the regular tax return, is really narrow-minded. It is very businessy. But there's a place at the bottom where you can write in you can add in other expenses. At ArtBooks, we make our own income statements that we then jam into the CRA's version. And a lot of stuff that we do will end up being supplies. So, hair and makeup can become a supply when we're trying to fit it into the CRA's version. There's also like sort of the write-in option. So at the bottom of the chunk of expenses, there's usually 3 or 4 lines. And if you're using doing taxes yourself and you keep on typing, you'll probably get more and more lines, and you can itemize them. I don't believe that the CRA sees that writing that we're doing, but you can always send them a printout copy of it if they have a question about it. I don't see them usually assessing, like, what is this other? But if they do, keeping track of your expenses that way, you're allowed to have different categories than the CRA has, which is why there are places for other. But mostly it's, we're going to have, there's a place for home office, there's a place for your phone bill, there's a place for memberships to unions, there's a place for art supplies, which is called supplies, there's a place for paying your agent, we call it management fees. There's a lot of places in there where the terms seem restrictive, can actually be, with some sort of lateral thinking, can work for your business.
Another question.
Yeah.
Thank you for that. How does HST work for Indigenous artists who work on reserve and don't pay HST? That's coming from Cynthia.
That's an amazing question that I probably don't have a good answer for. I've had to look into HST on reserves a little bit. I'm trying to remember the example that I had, because I think that the example was working on the reserve was one thing, but if you stepped off the reserve, you charge HST off the reserve, but you charge HST off the reserve. I don't know the answer to that. That's a question that doesn't come up very often, and I'm sorry. I should have educated myself more about that. But the CRA has an amazing resource on their website. They've really made their website much more user-friendly, much more common language-y, so you can read up about stuff. also they have a hotline, which is the number that I posted earlier. And while that hotline is much easier to get through to, the main CRA hotline is hard to get through to right now. It's about a 3-hour wait no matter when you call because COVID. But the HST hotline isn't being swarmed the same way, and you can call and ask for what they call an HST ruling. But yeah, I read an article where there was an example was a man lived on a reserve, didn't collect HST, but his business took him off the reserve. And when he did off the reserve was subject to HST rules. So whatever he was doing off reserve was subject to HST and on reserve wasn't. But I don't have a great amount of education about that. I apologize.
Well,
any other questions?
No, we do have another one coming in.
All right.
Does a home computer, which is used for editing, creating, etc., count under the other expenses in the T2125?
That's a great question. Computers are what we call an asset. So anything that, every accounting firm has their own rate by which they want to depreciate something. But something like something that's considered an asset that has long-term value actually has to be depreciated. So if you are looking at a T2125, there's a place at the very end where you'd be, it's complicated. It's really where you want to get into talking to an accountant, or you can even call the CRA and get them to walk you through the form. They will do that. But an asset has long-term value. You could sell it the next year for some money. We don't get to write off the entire expense in one go. So a computers specifically are in the class 50 asset, and they get depreciated at 55% year over year. The first year you buy a computer, you can only write off 55% of half of the value. It's called the half-year rule because you could have bought it in December. You can't get the value for the whole year. So it gets a bit fussy, but basically assets go into a separate category called capital cost allowance, or capital cost additions to assets. And that's at the very bottom of the T2125. And what would go in there would be computers. My firm looks at about $500 as being the threshold by which we depreciate or don't. So things are getting cheaper. So like, a cheap printer wouldn't depreciate because it probably doesn't have value beyond a year, but a computer has value beyond a year, so we assetize it. The same way we would assetize, if we're using our car for business, we'd assetize a part of the car, a camera, a drone, what else? A really good printer, just the usual. If you're a musician, probably your instruments are going to be assetized. So those are things you can't write off in one go because they do have long-term value. They still have, you could sell them tomorrow for some money. So instruments, guitars, cameras, cell phones, computers, those are all handled under the capital cost allowance part of the T2125.
Well, it looks like we still have a few more minutes left, about 8 minutes. But if there's any other questions, I'm hoping that you can ask them really, really soon because we're going to run out of time. But I just have a couple of notes that I actually took, and I just want to recap a couple of things. Sign up for your My Account if you haven't already.
It's a good thing.
Check for your unpaid checks.
It can be really helpful.
I've got a few actually. I'm saving for a rainy day. I checked there earlier today, and
Nice.
I was like, oh yeah, I'm gonna go claim those later. And you can actually sign up for the direct deposit, and they can just put it right in your account. Correct? Yeah.
Yeah, it's great. It's really, really great.
They'll never email you. They'll always send an email saying that you have mail in your My Account.
Yes. Nothing is efficient when it comes to the CRA. So the first line of defense is always going to be a proper letter, unless you sign up for electronic mail. So either you're going to get a proper letter or you're going to get a mail in your mailbox with the My Account. They call next, but they don't email.
Right. Yeah, lots of scams out there.
Yeah.
There we go. Got another question from
Right.
Breffney. How do you go about claiming part of your rent?
Good question. So we still want to apply the filter of what's reasonable. And there's been a lot of chat in the last couple of months about the work from home, and there's COVID. There's new credits for people who are working from home because of COVID, but those are different than artists work from home. So as an artist, if you do have an office space in your home, you can claim this, basically the square footage of that. So a percentage of that. So if we were to, I have 4 rooms in my home and one of them is an office. So I take about 25% because 4 rooms, a quarter of my home is my office. I have a dedicated office with a computer and a filing cabinet and a printer, and it's very much an office. A lot of people these days don't have dedicated office space. They live in small spaces, they have a laptop, they work on the couch. What the CRA is looking for is literally the square footage of an office. They're looking for the footprint of where your office is. So if you don't have a desk, but you have a filing cabinet and a bookcase, that could be your office. You want to claim a portion of that. So we're looking at the running costs of my home. As a renter, you'd be claiming a portion. We take the total of any rent, utilities, contents insurance, any basic repairs and maintenance to my rental unit, adding them all together and taking a percentage of that as a home office expense. And the T2125, if you're filling it in yourself, it's all broken down for you. There's lines, there's a percentage, they want to know your square footage. And so you want to take basically the footprint of your office as a percentage of your home. So a quarter, I would never take more than a half, because half is already pretty aggressive. A third is usually pretty high too. Typically people do about 20 to 25% of their home as an office at the most, taking into account, hallways and bathrooms, the entire home, percentage of. If you own a home, the claims are a bit different. Instead of having rent, you would have the interest you paid on your mortgage, but not the principal. So the interest on your mortgage and the property tax. And then again, insurance, utilities, repairs, not renovations, the running costs, the stuff that you spend just to keep the home going, not the stuff that you spend to make the home better, stuff that you spend just to keep the home going. Take a portion of that based on square footage as your home office. The COVID work from home is a different one, and that is for employees. So you can wear all the hats and have a day job in an art practice. And if your day job says you need to go work from home and we're going to give you the work from home credit for COVID, there's two different ways to do that. One of which is just to pick how many days you work from home, and you get up to $400 of non-refundable tax credits, which equals about $125 of refund or amount off of it owing. Or you can do the detailed method where you can claim, again, a bit of rent, a bit of utilities, a bit of cell phone, but you need your employer to issue something called the T2200 short so that you can do that. So if you are doing that, there's resources on the website on the CRA on how to claim those. They're different than work from home at home. There's a spot on the work from home. There's a spot on the T2125, has it very clearly laid out what you can claim for work from home as an artist.
I think that's pretty much it. ACMT 25 just mentions that just to keep in mind that for your uncashed checks that you will need a witness to sign the form, which could be difficult for COVID, as this individual went through the uncashed checks function last year. So little food for thought before you claim those checks.
That is a good piece of information to know. I didn't know that, and that's good. Thank you for sharing that. That's good to know.
Thank you for sharing everything that you shared for us today, Tova. That was really I think that helped me. Even I'm starting up my business in different ways as well, as an artist as well, and expanding. And so for me to be a part of this, just to listen, and I learned quite a bit. So, and I can imagine that others learned as much or more.
So. And even just having even if you retain 5% of what I said, you're that much further ahead with tax, and the main things we've hammered through are file on time, have my account, and don't be afraid. And those are the main things. Don't be afraid, because taxes are inevitable.
And if you didn't capture 5% of any of discussion, you can always hit the replay button. You can always go back through this session, go through those slides. This will stay up on IPAA's YouTube and Facebook account, and potentially other places. But for now, it's going to be there if you need to reference any material or have any questions that you may have. So I just want to say a special thanks to the Canada Council for the Arts, Ontario Arts Council, and Toronto Arts Council for making this happen. Special thanks to Heather Kilner for coordinating the panel and the IPAA Online series. And I want to say a huge thank you for Tova Epp for joining us today for IPAA Online Workshop Series number 2. All right.
Thank you so much for having me, and thank you for it was really great to speak to this audience, and great questions. So thank you.
Thank you very much. And we will be calling it a day here. We'll talk to you guys soon again.
Bye, everybody.
Oh, you left my heart wide open. You threw it on the ground. Oh no, but where it is now, it's where